Hey guys, it's Mark Followell with the Followell Property Group at Keller Williams here in Brownwood, and today we got a little treat for you. So I'm here with a good friend of mine and a lender that we like to use here. This is Tyler Horton with Nexa Mortgage, and today we're going to be discussing with you a couple of different things. So anytime we jump on here, a lot of times I like to give like a little market update just so kind of people can be up to date. But we're also going to dive deeper today in something that I feel like is a perfect tool for buyers right now and for sellers. And we're going to touch on that here in a minute, but that is a 2-1 buy down. What is a 2-1 buy down? How can it help me as a buyer or a seller, etc.? So without further ado, this is Tyler Horton. Tyler, go ahead and introduce yourself and kind of let us know who you are, where you're from, all that good stuff.
Appreciate it, Mark. Yeah, good to be here. Glad you sent me an invite to jump on here. Looking forward to getting to talk with you. So originally I'm from Goldthwaite, Texas, which is just down the road from Brown County. Parents and grandparents, whole family still lives there, so I'm in the area pretty often. I grew up there, born in Brownwood, went to college out in San Angelo, came back and actually coached at Brownwood for, if you include my student teaching, 3 years.
Go Lions.
Heck, go Lions. Got to be part of the football program, baseball program for a few years. That was awesome. Still friends with a lot of people in the school district, some coaches that are still hanging around there. And then got to know a lot of people, like Mark and people in the community. Love Brownwood. It's a great place. Then I went to work for a bank there. It used to be Mills County State Bank. Now it's called MC Bank. And then got straight into just mortgages with Nexa. And so basically we're the largest broker in the country, which basically means don't work for just like one specific bank or mortgage lender. We have about 240 different lenders that we can broker loans to, and that's been a real blessing to jump over that because everybody's kind of seen what rates have done. There's never been a better time to be on the broker side where our margins are skinnier than most places. Have more products than anybody that can offer. We do your regular conventional FHA, USDA, VA, but also have a lot of investor loans, like they're called DSCR loans, where we look at just the debt service coverage ratio on does that house cash flow, and we underwrite it just based on that. So we don't even necessarily need your personal income thrown in there. It looks good if you have good income, but got options like that. Got commercial options, even a couple of land only options. So kind of Swiss Army knife type thing. So it's been good.
Yeah. How long have you been with Nexa? How long has it been now?
So I'll be pretty much in about a month. It'll be 3 years. So been here 3 years, and so I've got a pretty good handle on brokering and kind of how all that kind of goes down. But even through, I talk about brokering, I'm still going to be your loan officer throughout the whole transaction. You won't even know any different. I kind of do everything for you as far as finding best rate terms. And then I'm your point of contact and my processor throughout the whole process.
And I can attest to that. We've done quite a few deals together, so I can certainly say that that is one thing about dealing with larger lenders. And I say this all the time on every video. Brownwood is very lucky to have a lot of high qualified local lenders. They really are, and I don't want to discount or discredit that. There are plenty of lenders here in Brownwood that are very capable. And that are very good. And I love dealing with people and actually having a relationship because when you have that relationship with a lender, it just helps things go smoothly. Whenever you start with this guy and then get past to this one, and you go on down the line, there's never an opportunity to kind of develop that relationship with some of those larger lenders. So I can absolutely attest to that you're there and the point of contact. And so that is not only appreciated from my perspective, but from our clients as well. So, well, let's get forward. So here's what I want to do. I want to ask you, first of all, I want your opinion, and I'm going to give mine here in a minute, of if somebody called and said, Tyler, what's the market looking like from a lender's perspective? Kind of give us where we are right now in July of 2024 as we hit the back half of this year, where we are, where you think we're going, et cetera. Go ahead and give us your opinion.
Yeah. I mean, obviously, I tell them, hey, I don't have a crystal ball, but I can I keep track of all the metrics and mortgage rates. There are a lot of different factors that go into them. Bond market, treasury markets. I mean, just global money moving in and out of those markets. It's kind of hard to predict. But I would say this. I mean, all indications are the Fed's kind of at the end of their tightening cycle. Who who knows when they're actually going to start cutting rates. I know this morning we had a good CPI report, which basically is inflation. An inflation report came down showing inflation's, I believe, the lowest it's been since like 2020, which that seems like a lifetime ago, considering everything that happened between now and then. But that's good news. And basically and what that should mean for the Fed is, hey, them hiking rates over the past couple of years, starting to see some progress. Inflation's coming down. They can have some ability to start easing rates to, give us a little bit of breathing room. And when I say us, I mean consumers just across the board with interest rates, because rates do affect everything from credit cards to how your business, how much it can kind of grow and expand, to your mortgage rate, which is what we're talking about today. But got a good report today. And I was telling Mark before this that I saw some statistic that came through that there's an 85% chance now that we're looking at a cut by September. So that's sooner rather than later, which I think is good news. You look at Canada, their bank's already cut once. The European Central Bank's cut once. And, not to be conspiracy theory, but normally these central banks, they kind of operate in unison for the most part. As we hiked, everybody else hiked, and now as we come back down, usually gonna come back down. So I think that's kind of where we're at in the rate cycle. Now, how quickly rates will come down from where they're at, in the sixes.
Yeah.
Your guess is as good as mine. I mean, they should be coming down. How fast they come down, I don't know. It's hard to say, but we should be getting some more favorable outlook as far as rates go. So these people that are buying now, it's kind of what we talked about. You can get a seller to pay for quite a bit of stuff. You can get you a pretty good deal, maybe walk into some equity. Rates come down over the next couple of years, you'll be in a pretty good spot going forward. So always kind of try to be thinking, years, 5 years, 7 years down the road, not just today.
Yeah. Well, that is a promising, and it's a promising sign. But back before this, when rates got up in the 7s and they were saying, hey, they could even get up into the 8s. And I was like, gosh almighty, but then when that outlook started to turn, I started saying, hey, by the end of 2024, rates are going to be down in the 5s. And then they were like, by the end of 2024, it'll be down in the mid 6s. And it kind of started going back the other way. So it's good to hear that. And I'm seeing the same thing as far from a rate perspective. I'm kind of a nerd on that stuff. I kind of keep up with it because it affects our business, it affects our clients, et cetera. But a market update from kind of our side, as far as inventory and pricing and days on market, et cetera. We have, of course, in COVID it was just an absolute seller's market. It was basically name your price as a seller, and if the appraisal hit, and it was good, and in some cases it didn't hit, and buyers were paying the difference. And it was just because the rates were so low and the supply was so low, and now we're kind of seeing the opposite of that. And so now we have an oversupply, and I don't know necessarily if it's an oversupply, but we do have a lot more listings than we've had on average in the last few years. So you have a lot more inventory coupled with a significantly higher interest rate than where it was and what your neighbor paid. And so when you have that, you have less buyers. And so what we're seeing is we're seeing it kind of shift completely out of a seller's market. And we had, maybe it felt like a couple of months of a neutral market, where now it's kind of shifting over to the buyer side. So buyers are able to take their time and, get a little bit more aggressive on their negotiating. And so what's happening is we have all these listings that are getting there, and some of them aren't moving. And I mean, there's listings that I've got right now that just aren't getting shown. And some of those, it could be price, it could be location, it could be a lot of different aspects of it. But what it is buyers are basically getting a lot more picky. And so that is kind of one of the reasonings behind me wanting to jump on here with you and do this and kind of shift into the segment of what we're doing here, discussing the 2-1 buy down. And I heard you say something earlier too, kind of about, you'll set yourself up here in a few years to be in a good position. And I think we discussed it just briefly before we started this, but like anybody who's buying right now, anybody, I would venture to guess, if you're buying, 18 months ago, 12 months ago to now, your lender is probably telling you, hey, touch base with me in 12 to 18 months. Let's see where it's at. Let's see if we can't refinance you and get you out of where we're at and get you there. So with that in mind, whether your lender is saying that or not, you should be thinking that as a homeowner and a potential buyer, that buying now at whatever rate you get qualified for should be looked at as a temporary deal. You can always refinance out later. And with that, I kind of want to just kind of lead into what a 2-1 buy down is and why that's going to be important for us during this time because of the potential of refinancing in a couple of years and how it works. And I'll kind of touch on it after you describe it here for our viewers on what it is and why it's beneficial to a buyer or seller. But if I'm a buyer, Tyler, and I call you up today and I said, hey, I've got this real estate agent and he called me up and he wants me to get pre-approved with you, and he told me to ask you about a 2-1 buy down. What does it sound like when you describe that to a potential buyer?
Yeah. So basically I tell them, hey, it's something, the best way to describe it is we're trying to bridge you and protect you from the higher rates you're seeing right now, try to bridge you into a lower rate environment. So how you do that, you can do a 3-2-1, which is a 3-year buy down, which those cost quite a bit to do that. So we just really do 2-1, and there's also a 1-year too. We'll just talk about the 2-year. Basically, you get a 2-year interest rate or a 2-point buy down from the seller for your first year, goes up to just 1% the second year, and then by your year three through 27, you're at your normal base rate. So let's just say 6.25 on FHA right now. If we were able to do a 2-1 buy down the first year for that buyer, they're going to make their payments as if their rate's a 4.25. Which that's
substantial difference.
Substantial amount of savings there. I mean, depending on how big the loan is, I mean, that's hundreds of dollars a month, which that matters. And then, by the second year, it would go to 5.25. And I think kind of what we talked about in this kind of market where we think rates are starting to kind of peak and head on their way down. I think they're already kind of been heading on their way down. It's just kind of buy you some time into the future to where, one, you're not going to be, say rates do come down into the mid 5s, but you've got a 4.25 for the next 6 months or whatever it may be. You're not rushing to go and refinance. You can kind of buy yourself some more time and be patient and say, well, I want to see what rates do. They may go down to 5% or maybe even lower. Who knows? I'm just totally speculating here, but I'm just saying you do this, it buys you some time so you're not refinancing too soon, because that is a thing. And a lot of lenders, there's a lot of predatory lenders who just go over those refis, and you'll get spammed by, wanting you to refi, and it may not be in your best interest to do that. So, and then from the seller side, and I think you can probably talk about this too, that, if the property's been sitting there for a little bit, this is just something to kind of, help those buyers make the payments a little bit more affordable for them. Instead of dropping the price by 10 grand, offer them, hey, we'll fund a 2-1 buy down for you. I think that will be much more of an impact to those buyers, because they're going to be making those payments. 10 grand off the purchase price over 30 years. I'm not saying that's not a big deal, but 10 grand going towards the closing costs or helping them buy down the rate, that's going to give them a much more immediate impact. And I think people will respond to that a little bit better than just knocking the price down. But
I think it's an immediate impact. And so, and a lot of times, I don't know if you do this, but I do this. I'll be talking to somebody and I'm using terminology and, buy down points and not, and I'm not even understanding how the person I'm speaking to may not have an idea what I'm talking about. So what I'd like to do just briefly is let's bring this down to a level to where everybody's going to understand this. So the reason for this is I have spoken with a substantial amount of my sellers. I would say probably about 80% of my listings, and the sellers have agreed to offer a 2-1 buy down. I have gone over the cost with them. I have shown them that, explained that to them. They're like, you know what? Let's offer that to a buyer. And I'll get into it more on why it's a win-win for both parties here in just a moment. But specifically, let's take a house. Let's do this one right here. I've got it sitting here in front of me. This one is 1515 Avenue D in Brownwood. It's been on the market for a little while. The price is down now, but it is a 3-bedroom, 2-bathroom. I think it's 1,700 square feet. We got the price at $159.9. That's like $93 a square foot, right? And so let's show people what a normal FHA rate would look like and what a payment would look like. And be sure to let me know if that's principal and interest only, or if that's the, taxes and insurance, all that stuff included. But for those that don't know, an FHA rate is one of the easiest loans to get approved of. They have the highest debt to income ratios, et cetera, but it requires a 3.5% down payment. For some of those that cannot qualify for the down payment, there are some other loan programs that Tyler could talk to you about that could actually help out with that down payment. But on an FHA rate, I think you said 6.25 earlier for
Yeah,
159.
yeah.
What are we looking like for a payment on that property?
So, like you said, just principal and interest, because there will be taxes, insurance, but as we're kind of spitballing here, hard to
Yeah.
give an accurate estimate on what taxes and insurance probably would be. So just talk principal and interest. So at just your regular 3.5% down, 6.25 interest rate, looking at about 966 a month, and that's principal and interest. So you will have
966 principal and interest. Okay. So because that seller has agreed with, he's like, Mark, I want to offer that 2-1 buy down. Make sure all the buyers that are looking at my property know I'm offering a 2-1 buy down. So we're going to be putting this out there with links to the listings and all that stuff. But if my seller paid a 2-1 buy down on this deal here, talk to me about what that year one looks like.
Yeah, so pretty simple. Drops it down 2 points to 4.25, and that brings your P&I down to 772. So roughly $200 in savings there.
A month.
Yeah,
per month. Yeah. And that is directly that is $200 a month for 12 months. And who knows where the rates are going to be there then. You kind of hit on that a little bit. It may be in the mid fives, but year two, it goes up 1 point, right? And it'd be 5.25.
Yeah. Yeah. We'll go at 5.25. That would jump up to about 866. So
$100 a month.
Basically $100 savings year two. Yep. And I will say this with FHA, and I won't talk too much about refinancing, but there's these things called streamlines with FHA. Very easy to do. Doesn't need an appraisal. It takes a couple weeks to do. So basically, if rates do drop and you've got an FHA loan, it's a quick process to do it. No appraisal. The goal would be not to do it with hardly any money out of pocket, because it's basically just like a quick, almost not a recast, but you're dropping your rate. And if it makes sense to drop at a point or a point and a half, and you might have to pay $1,000 out of pocket for it, that usually makes a lot of sense because you're going to save a lot of money. So just a quick plug on that FHA, you can refinance them very easily for little cost.
Well, and I know that this one here, the savings is obviously $200 a month for 12 months, $100 a month for that next month. I mean, that's directly off of your payments.
Yep.
What we did one the other day, I spoke to another agent who showed a property that was obviously a lot higher. It was a lakefront property, 3,500 square feet. I think it's listed at $895. So the cost of that buy down is substantially more. But I think we ran the numbers on that one, and it was like $700 a month.
Yeah,
for the first year, and like $350 a month for the second year. I mean, it was outrageous.
Yeah, and
even the amount of savings.
Even if it did get into like jumbo loan territory where you're over that conforming limit, which I think is like 766,000. So if it was a bigger property, we can also do a 2-1 buy down for that too. So, can be flexible on all this when it comes to loan amount.
Well, so I want to use, because this is what we were talking about earlier. I said I wanted to touch on why this is important for buyers. I think it's obvious why it's a benefit to buyers. It's a direct monthly savings off of your payment, and I want to be very clear on this. This is not an adjustable rate mortgage where you go, well, Mark, Tyler, the rate's adjusting. No, well, this is predetermined and locked in, and it will not get over the rate that you were approved for already. And so it's just to hit on
that, it's a 30-year fixed loan. It's almost, I kind of tell people, when you go to closing, it's going to have your base rate on there, but we've got something called a buy down agreement that you'll sign and the seller signs that basically says, hey, we're putting these funds almost in just a separate account. When when you start making your payments, your servicer will tell you how much you got to pay. Your servicer behind the scenes will automatically basically subsidize your payment for you. It's almost just like a sleight of hand. That you just make your payment. They'll tell you what payments make, and it's going to basically add up to what we're talking about here. But your base rates, as far as everybody else is concerned, how it gets recorded, it's a 30-year fixed rate. But we're just kind of doing a little.
It's essentially a subsidy. The seller
it's a subsidy. The seller subsidizing your payment. That's basically what it is.
So that is obvious why it benefits the buyer. So I want to talk just a minute why it benefits a seller. So talking about that jumbo deal we were talking about earlier with that big lake property, they were listed at like $895,000. If a buyer comes in and tries to negotiate, say, $50,000, $60,000 off of that sales price, and let's say a seller agrees to that, or a buyer agrees to pay that full price, but get that 2-1 buy down, knowing that they're going to refinance anyway, they are going to save a substantial amount of money paying $50,000-$60,000 more with a 2-1 buy down than they would be just negotiating that price. And so that is a win-win for everybody. Yes, the buyer pays more for the property, but they get monthly savings that are substantial on their payment. And then whenever that time comes to get a higher rate, that's when they typically look and see, get with the lender and find out, and then refinance. So it's buyers can actually save a significant amount of money on a monthly basis. Sellers can offer that in lieu of just continually dropping the price of the house. And so to me, it's a huge win-win. And I really hope that there's more conversations being had with buyers and sellers and their agents and their lenders about whether or not the 2-1 buy down is going to be something that benefits them. It may not be. You and I, or actually you got a deal going with my wife right now that they looked at that, and they looked at a 2-1 buy down, and they found a permanent buy down that might work out better. And so that's the main thing. We're not saying 2-1 buy downs are the only end all be all of anything, but it's absolutely something to look into, whether it's a permanent rate buy down or a temporary rate buy down, like the 2-1 we're talking about. I just think it needs to be a discussion that agents and clients are having with the lender to see what their best options are, without a doubt.
Yeah, I agree. And just a quick note, I get a question all the time. It's like, well, Tyler, what if we refinance before that 2-year period's up? Because you got 2 years to have this buy down. That's totally okay. Those funds, whatever's left over, it'll just get put towards your principal. So the money is not going to go to waste, whether you actually use it for the full 2 years or you just do it for 18 months. That money's yours. And if you do refinance, it just goes down to knock down towards your principal. So can be a win-win for buyer, seller, for everyone, to just kind of try to help ease things and get the market moving.
Well, I completely forgot. I knew that, and I have not thought about that since we've had these discussions. Because that was
it's a question, and it's a valid question.
Yeah, where does that money go?
Exactly.
And so that subsidy that's not being used, and it can just get applied to the principal. So that's a very good point that I forgot about. Well, so I'm going to put more information. I'm going to put all the listings that are offering this on my Facebook page. We'll have it shared. But if somebody wanted to call you or get a hold of you, how do they make contact with you if they want to get approved for a loan, or if they wanted to ask you more questions about the 2-1 buy down?
My cell phone number is 325-451-4149. I don't love sending people just to my website or to an application. Contact me. Let's talk. We'll do an application over the phone with you. Knock that part out. Answer questions as we go. My email is thorton. That's THORTON @Nexa Mortgage, which Mark will put it in the description here. But either way, shoot me a text or DM me on Facebook. Whatever. You can find me wherever. So anything works for me.
All right. Well, hey, I sincerely appreciate you doing this. There's going to be questions. I've been kind of laying the groundwork, talking to people about a 2-1 buy down, and there's always these questions. And so I'm just going to try to get them paired up with you or another lender that knows how to describe this stuff and have them look at all their options. But thank you for hopping on here, and hopefully more people will take advantage of this and utilize it in the time that we're in, and we just buy time until these rates drop. So I appreciate it, Tyler. And
I'm thanks for having me on, man. I appreciate it, brother. Thank you.
Thank you. We'll see you.